Good morning this Monday the 29th of April. I'm Grady Wolf, market analyst with Bell Direct. Wall Street returned to rally mode on Friday following the release of strong earnings results and fresh US inflation data. The S&P 500 and Nasdaq both posted their best week since November last year and closed up 1.02% and 2.03% respectively on Friday, while the Dow Jones added 0.4% to end Friday's session up 0.4%. Alphabet was a key driver of the rally on Friday, with the stock lifting 10% after the tech juggernaut posted better than expected first quarter earnings, while Microsoft added nearly 2% on the release of strong third quarter results, driven by an uptick in cloud growth. Investors also digested the US March core personal consumer expenditures index reading, which came in at a rise of 2.8%, which was ahead of expectations of 2.7%. In Europe on Friday, strong earnings results out in the region also prompted investors to rally around equities to close the week on a high, with the stock 600 rising 1.2%, while Germany's DAX added 1.36%, the French CAC rose 0.89%, and in the UK the FTSE 100 gained 0.75% on Friday. The global rally outside of Australia on Friday extended to the Asian markets, rebounding from the sell-off in recent times in the region, led by Japan's Nikkei climbing 0.81% on the Bank of Japan maintaining interest rates at 0% to 0.1% for another month as expected, and Tokyo's headline inflation coming in at 1.8%, easing from 2.6% reported in March. The local market ended Friday's session down 1.4% as hotter than expected inflation data released on Wednesday continues to push bond yields higher and dampens investor hopes of interest rate cuts out of the RBA in the very near future. When the interest rate outlook is uncertain, investors tend to flock to investments that offer safer returns like government bonds, which is why the Australian 10-year bond jumped 19 basis points on Friday to 4.59%, and the 1-year bond jumped 13 basis points to 4.36%, which tops the current cash rate of 4.35%. Investors locally also took strong lead from Wall Street on Thursday after the weaker than expected GDP data was released, indicating the high interest rate environment is dampening growth for the world's largest economy. Every sector locally ended Friday's session in the red, led by the rate-sensitive real estate sector, which tumbled over 2%, as companies in the REIT space wear the full cost of the high interest rate environment, unlike other sectors that can pass on rising costs associated with every interest rate hike. The materials sector was also weighed down on Friday by BHP falling over 4.4% after the mining giant announced a takeover bid worth almost $60 million for copper miner Anglo American, which was subsequently rejected by Anglo American on Friday afternoon on the grounds of materially undervaluing the company. Sleep apnea device specialist ResMed jumped 9.6% on Friday after reporting impressive Q3 results, including revenue up 7% to $1.2 billion US, gross margin up 260 basis points to 57.9%, which beat consensus expectations, and income from operations increased 25% to $374.6 million US. ResMed also issued a 48 cents per share quarterly cash dividend, which impressed investors. Ahead of the first trading session of the new trading week, the SPY futures are expecting the ASX to open Monday up 0.32%, tracking Wall Street's rally on Friday. On the commodities front this morning, oil is trading 0.05% lower at $83 US and 72 cents a barrel. Gold is up 0.31% at $2,337 US an ounce, and iron ore is up 0.44% at $110.16 US a ton. One Aussie dollar is buying 65 US cents, 103.19 Japanese yen, 52.32 British pence, and 1 New Zealand dollar and 10 cents. And now let's dive into some trading ideas for your consideration this Monday. Bell Potter has increased the 12-month price target on Regis Resources from $2.60 to $2.80 and maintain a buy rating on the gold miner following the release of the company's March quarter update, which came in below Bell Potter expectations as a result of rainfall impact on operations. However, the price target increase is due to gold price tailwinds and the company completing its first full quarter of unhedged gold sales. And Trading Central has identified a bullish signal on Champion Iron following the formation of a pattern over a period of 16 days, which is roughly the same amount of time the share price may rise from the close of $7.12 to the range of $7.55 to $7.65, according to standard principles of technical analysis. And that's all we have time for this Monday morning. Have a wonderful day and happy investing.